What is going on? Welcome to Spy Series number 15. We got commercial wholesaling extraordinaire Tyler Bennett out of AZ in the house. Excited to have him on. We first connected through maybe Instagram. It's actually the first time we had, or seen each other face to face. Talked on the phone at length about a couple deals. One was a pretty big one. Didn't come into play. As I'm learning now, these things are marathons, trying to get these commercial wholesale deals closed. But appreciate you coming on. How you doing?
Jake, I'm doing wonderful. Thank you for having me, brother. And actually, I'm glad you mentioned that deal. We're circling back with Steven today, and hopefully maybe we can make something work on that one. Sellers more motivated. Properties made some progress. The units are rented. Rehabs are getting done. So maybe we could make a deal on that one.
I think that's an important point just to jump on right off the bat is like how big does follow-up? How big of a factor is that in the whole commercial sector?
Yeah, so I've been telling my guys we do some single family wholesaling as well here more recently, but follow-up is key, right? So there's a deal I have in Phoenix, just for example. I've been maintaining a relationship with this guy for like 2 years now, right? It's a $5 million apartment complex. He wants to pay me a good fee. It's worth it. It's just more of a complex scenario, and I want to explain how it changes and how it differs from single family, and especially and as you get into larger deals where it's going to change, but where there's other partners, and it makes the deal a little bit harder to buy and sell and transact, right? So sometimes you have to wait 12 months, 18 months, 24 months to actually do that deal.
Absolutely. So that was a $15 million or $5 million?
$5 million.
$5 million, yeah. And I think it's interesting because it's kind of like this quality over quantity approach with commercial, where it's like it's great in the sense that, okay, it's higher price points, bigger spreads. But I think the part that people don't talk about is like if you're only doing commercial, the sales cycle is so long, it's almost more stressful because in my opinion, I haven't done it, but I can imagine like if I only have 3 deals closing throughout the year, when it's coming down to the finish line for that 1 or 3 deals, I'm probably, like stressing, like I got to get this deal closed versus.
Yeah. And I love that you say that, man.
Every week. Yeah.
Yeah. I love that you say that because for the last 3-4 years, all I've done is commercial, right? And deals take 3, 6, 9, 12 months to do. Then after that, you manage, operate. I've done syndications. I own and operate 44 units in hospitality. We have healthcare facilities and outpatient behavioral health care. And so it just takes so long to get these facilities going. Like we've been waiting 9 months for one of our healthcare facilities to get licensed, surveys. It's just so many hurdles, right? And I had this shift. I have a partner of mine. He does really well wholesaling single family, and he does 6-figure months, right? And he doesn't have assets or some of the other benefits that I have, but the transactions, they come every 2 weeks, every 3 weeks, monthly, consistent. So there's just a big difference with the commercial deals, especially the larger they get, with the time frame it takes to actually close them. You might make a couple $100,000, but it's going to take you 9 months, a lot of work, and it's a lot of stress, and that whole time you might not have pay, right? So it's just a lot of pressure on you. So as you do that, I would always recommend to dabble in single family, have some shorter life cycles where you could get more frequent wins, 5K, 10K rips, and then shoot for the $100,000, $200,000, get 1 or 2 across the year.
100%. It's like, you got to have that mix, whatever business you're in, especially with real estate, because a lot of it is longer term play. You got to have that mix of today money and tomorrow money. If you're only investing in multifamily, it's tough because you got to live today, so maybe you got to implement some fix and flip or some wholesale to offset that. So, you're building wealth, but you got the today money. But that deal you had spoken about, so it's a $5 million deal and it's a hospital, you said, or a hotel?
No, this one's actually an apartment complex. It's a really nice apartment complex. It's a new development. It's really, really nice here in Phoenix. And it's a gentleman and his ex-wife. And it's getting both of them on board in order to sell this. I've taken them 2 offers, really solid buyers, proof of funds, everything's there. The guy wants to sell it. I've taken his new wife out to lunch. We have a great relationship, but it's just getting this ex-wife on board to sell the deal. And he knows she wants to sell, but she's trying to wait till after the election next year. So hopefully we could finally get it. But that's a 5% assignment fee off of $5 million that I would be able to get and just waiting 2 years of, building the relationship with the guy that's worth $250,000,
Yeah, that's incredible. I mean, multiple six-figure spread right there, right off the bat. So I guess with that deal specifically, how does that differ from, say, your just traditional residential wholesale deal? What are some of the nuances between what you've had to deal with there and because now you do some residential wholesaling as well. What are some major differences there that someone would need to understand if they got into commercial?
Yeah, so I love that you asked that, Jake, and I wanted to break it down like this, right? So when you're doing single family, it's like retail buyers, individuals. Sometimes you deal with investors. The majority of the time, you're dealing with an individual, right? So it's property conditions, essentially, rehab budgets, rent estimates, and the personal situation. What are they going through, right? Divorce, there's death in family. There's all these challenges, right? Loss of jobs, all these pain points for the individual, okay? And so as you go into a business and you start doing commercial, like I mentioned that $5 million deal, right? You deal with a group of individuals, right? There's partners, there's dad, son, the guy next door. I actually almost sold the one next door too, as a father and a son. And so you're dealing with a family or uncle and an investor and a friend, right? So there's 3 to 5 people always in commercial deals. But then as you scale into larger transactions, I've mentioned that I'm doing a hospital, and we tried that other big deal in Texas. Those are institutional level transactions, right? So you're dealing with people that are institutions. They're no longer just groups, but they have whole systems and process, tens or thousands of employees, depending on the size of these businesses, right? And so those are kind of the differences within the transactions of the seller types of those types of deals. So single family, you have individuals. Anything above 1 million, I would say it's a 5, maybe even 10. Small groups, syndicators, younger, smaller groups. But anything over 10, you're dealing with, Hilton, Marriott, big hotel chains. That's the only person you're going to transact with.
Got it. So that's awesome. So the first thing you'd mentioned is the difference in distress type. So with single family, you deal with a lot of personal distress. When you get into commercial, it's probably more asset distress, right? It's mismanaged, things like that. Rents are low, capital expenditures are needed. You could run into some situations, maybe they, over leveraged or whatnot.
Yeah. So, and not even just like not even mentioning the property first, but also just talking about the seller, right? Like in negotiating with those people, in the process of negotiating with them, we could get more into the actual property, the inspections, the due diligence, and everything that comes along that. But the individuals themselves, it's a lot harder to negotiate with institutional level funds, that own $1 billion worth of real estate. They want 10% hard earnest if you're serious in the transaction, and we're talking about $20 million deal. Like, you need to put $2 million up, right? Just for them to take you serious, because they have billions and billions of dollars that they manage, that they own. And so you need to bring someone of like equal clout to even to get their attention. You know what I mean? Like the deal we're working on in Texas, that group is reputable enough to get that deal done, the deal size, and they could actually perform, right? And so you need to find that, and matching that's really, really, really hard, in my opinion. Not even factoring the property, but just negotiating with those sellers and actually getting a contract with them.
Yeah, no, that's really good. And I think, so like I said, there's 2 different types of distress. There's also the major difference you said is a single family, you're dealing with one individual, typically. Maybe sometimes you have a brother or sister. Commercial, pretty much always, so it seems like there's probably 3 levels of commercial properties. You have the mom and pop commercial owner who might own a small commercial building, and he is just a sole person. Then you have a cohort in the, $1 million to $10 million range that are syndicators, and it's a group. And then at the very top, you have institutional level parties, which you have to deal with, which is even harder to get everyone on board and huge barrier to entry. So what would you say the barriers to entry to getting into commercial are at those different levels for someone who's just doing residential right now?
Yeah, so making themselves, I would say, like making them seem reputable enough and experienced enough in that specific subcategory of commercial, like I've mentioned, healthcare and multifamily and hospitality. So, like just to get insurance, when we first bought a hotel, we bought our hotel in cash, and we couldn't even insure it because we didn't have experience to insure it, for example, right? So like just to make yourself look reputable enough and experienced to actually do that deal. And I think that's the hard part, right? So bringing on partners, and that's why people have partners, PGs on the deals, or however they structure it, especially if you're trying to acquire and or flip, you need pretty good earnest funding, and you need to have that ready and able. So if you want to buy a deal, you need to have 20, 50, $100,000 ready to be able to put up. And a lot of those are the barriers to entry. So if you have lending opportunities, with people that could help you with the earnest and provide proof of funds, and some sort of liquidity, like actual bank accounts where you could see 5, 10, $20 million and ready and accessible, like that's what they're going to want to see. They don't want to just see a spam hard money lender proof of funds. They want to actually see liquidity in the form of a down payment. And so I would recommend finding partners and resources like, for example, myself or other people in the industry that you could partner with that have those resources and that could help you acquire those deals and seem reputable enough to even lock up the contract and help the seller.
Yeah, so credibility is a massive thing in that commercial space. You said PG. I think you're referring to personal guarantee. What is that for people who don't know?
So personal guarantee. So typically when you're doing a deal, right, when you're syndicating, you got like 4 parts of it. You have a lender, you have a personal guarantee, someone that has assets or cash sufficient, like greater or sufficient, same to the asset value you're purchasing. So if you're doing 10 million, they need like 10 million cash or a portfolio of 10 million. Then you have like the deal specialist, which is probably you, where you found it, you procured it, and then you have a broker that's working on it. So typically with how you negotiate those deals is with those 4 parts, and that's how you'd structure it. And the PG is crucial to getting that loan, and the syndicators typically they raise the capital, right? They own a small percentage of the deal to operate and manage, but the personal guarantee is just the majority owner of the asset, since they had to bring the majority of that equity and actually secure the deal. So it's an investor or someone that you could use to partner with on the transaction.
Love it. So being a personal guarantee, you don't have to do anything, but you do take all the liability if anything were to go wrong. So it's kind of a double-edged sword.
Right.
So it sounds like what you're saying is, if I'm in residential and I wanted to get into commercial wholesaling, right? There's essentially 3 different levels, as I had mentioned. If I want to just get in it on my own, where, credibility always matters. I'm not going to say it doesn't matter, but where credibility is less significant is in that smaller commercial range. So maybe it's a commercial property, $800,000 to like $3 million. It's a mom and pop person. That's something that like I could just go take down, right? And maybe that's the first step from going from residential, just dealing with those mom and pops in commercial. And then once you start to understand the verbiage and you can speak the language of commercial, then you can kind of move up to talking to those syndicators, and then eventually the institutional people. Is that fair, would you say?
Yeah, and Jake, I love that you broke that down into 3. I had it too, but you broke it down into 3. Now that I'm thinking about it, the first 2 deals that I've purchased and syndicated with was mom and pop sellers. They were tired landlords, 70 years old plus, been running it for 20, 30 years. They had all the equity. They just really needed to retire, health, all these other concerns in their life. And the motivation was there, and they were motivated to work with someone younger and ambitious and hungry that might not even have the resources, right? But they just want to see them succeed, and they want it to like be passed off, right? So that's where I found my success in my first commercial transactions, and where I shifted all my focus from residential to commercial.
Yeah. And that's where we found success in commercial too. All of our spreads that have been over 6 figures have come from that. They come from 8 to 12 unit multifamilies, or a small commercial strip mall, that was owned by some guy, inherited, whatever the case may be. So that's phenomenal. I think that's some great actionable steps there. I think the biggest thing to take away from that is that kind of the 3 different levels. Let's, target those mom and pop commercial people first. and see what you can do, because that's the most similar to the residential process. But just know that, you are talking to an investor avatar type versus a Sally Joe who's selling her house down the street avatar type. So you got to speak a little bit of a different language, to build rapport with those commercial people. You want to speak the investor lingo and know those things. So definitely something to note there. But I think it's just important to note too, that just because these prices are inherently larger, the wholesale spreads are larger. Because if you think about, okay, wholesalers make on average 10% of the fee. So say it's a $400,000 house, you make $40K. If it's a $4 million property, you make 10%, you could make $400,000. And it's like the same percentage, but it's, 100 times more, or not 100 times more, 10 times more. But I think that's something to know, just because the prices are higher. It's kind of the same thing. But anyways, so you talked about different asset classes. Can you kind of talk about what's your favorite asset class in the commercial space to target, and why?
Yeah. Real quick, you were mentioning price, and I want to talk about valuation and a kind of a difference with comparables. Typically in single family, we look at comparables, maybe rent estimates at most, but we don't really value on revenue, right? Whereas in commercial, you're going to be more focused on revenue, replacement costs, comps, and a lot, like you could look at CapEx, you could look at a lot of other, whereas purchased before, what the CapEx, and you could really determine value 4 to 5 different ways. NOI, you could look at it and analyze it and then average it out based on all of those things. See what the market's calling for, right? Comp it at an 8 cap. Then you see the replacement cost, call your insurance guy, see the revenue, see the gross, see the NOI. And that's where you're going to want to analyze the value and how you determine the value and worth of a business in commercial. So take a blended average. That's what they do with an appraisal. And they focus on those 3-4 valuation methods. And that's how you determine value. And that's how you could even make sense if it's a good deal or not. So if you can't value it, you don't know what to resell it at, and you don't know where it's good or not. But as far as asset classes where I'm invested in, I started in commercial in hospitality. We focus on hospitality, multifamily, and healthcare. I would say that one of the most lucrative is going to be healthcare, but where I'm most experienced is going to be hospitality. I've done Airbnb since 2018, converted all of my Airbnb into commercial hotels, motels, and operated that. But where I've made most money is through healthcare. And that's where I would say my favorite's becoming, is more of like a healthcare and or hospitality facility.
Love it. So what about healthcare and hospitality do you find more attractive than other things? Just because you've known it the longest, or what are some of the nuances of that versus multifamily or gas stations or retail or whatever?
Maybe it's not as attractive at this moment. For example, hospitality, after 2020, hospitality took a big hit. There's a huge conversion. A lot of multifamily investors shifted and went in. The barriers lower and the cash flow is high. So typically, most hospitality assets are going to be like a 12 to 15 cap, whereas multifamily is going to be like a 3 to 8. In most markets is what you're seeing. And so the cash on cash returns are there. And as an investor, interest rates are high. So if you're acquiring multifamily, you're basing it off of appreciation and not a cap rate, because the cap rate's lower than the interest rate. So you're not making money, right? You're hoping that election goes well, values go up, interest rates drop, and all that. But whereas in hospitality, you could still make money because the cash on cash returns are there. And so, and you could buy for 50, 80 a key and make, $1,500 a month net return on that investment per door, which is huge in some markets, right? So you can't replicate that in multifamily. And so that's why I would like it. Through my experience investing in the last 3 years, that's where I found a lot of my success. And in healthcare, why I would like it is really complex. It's really hard to get into, but when you start to learn the ropes and you have the relationships, the deals are incredibly lucrative. Very complex and hard, a lot of inspections and things you need to know, regulations, but the deals make a lot of money. And so I'm looking at like a $75 million nursing facility in Kansas. It's huge, right? And being able to work on something that big and move that, just a 1% fee would be multiple 6 figures, But having the complex or the special knowledge, I guess, to do that is where you got to acquire it. Maybe make some relationships, but I would highly recommend those areas.
That's incredible. Yeah. So you like the hospitality seems a little bit more resilient for downturns just because that's such a, integral part of the economy, hospitality, especially COVID, more people in the healthcare facilities and just the up and coming retirement sector, this assisted living, things like that. That's all becoming really, really popular. What kind of timelines are associated with this deal? Like, for example, this hospital that's, $70 million. What could you expect from first time you touch someone to when you're actually getting paid if everything goes perfectly?
Well, I'm going to base it off of some connections I have, but if everything goes well with the connection, I would say 90 to 120 days through everything, right? But something that's vacant, this is important to know, something that's vacant, there's another property I'm working on in Phoenix. It's going to take 2 to 3 years to get that operational and running, right? So, like, think about it from an investor standpoint. The people that are in this space that are pouring 10, 20, $30 million into a facility and waiting 3 years to get it licensed, rehabbing it, going through all of these processes, it's a very long process. So you have to have someone that's very committed and able to perform, right? But here recently with the last hospital I worked on in Arizona, I've made some pretty good connections and just trying to see if I can line something up with that. 3-4 months, man.
Yeah, I mean, just at the end of the day, it's risk and reward. So, the higher the risk, the longer that timeline to pay off, the bigger the payoff's going to be. That's just a natural part of, economics. It's just higher the risk, higher the reward. So definitely have to be patient with those. That's insane. 2 to 3 years. And again, going back to what I said before, something like that, you'd want to make sure that, you have some other income coming in as well, whether it's smaller deals, mixing something else in, so you could get some stipends of money in between.
Right. That was the wake up call for me. So, like, I'm coming back to it. I have some commercial wholesale knowledge and experience. I've made a lot of acquisitions. I've dabbled in residential, but launching a residential and treating it like a business. We have 5 full-time VAs. We have 3 closers. We have someone on dispo. We have a whole business that we built out to it, but we've generated 130 leads in 6 weeks. We have 11 contracts or so. August is looking amazing. We launched this in June, taking it full time and trying to make it a real business, right? And applying business experience that we've learned in hotels and healthcare and whatever we've done before and scaling with me and my partner and making that work, because a 2K rip or 5K rip is totally worth it. Don't get discouraged. People that are wholesaling, like, I'm envious of other people that are doing that consistently, because I'm waiting 9 months on a license for facility. Maybe we do that. We make multiple 6 figures a month, but it took me a year and a half and a lot of stress and time and applications and surveys and inspections, fire marshals, everything you could think of, the state coming here. And it's really hard, right? So I was tired of waiting and I needed some money, right? And so that's where I've shifted. And the 2, 5, 10Ks are worth it all day. If you could do that for a month, you're still winning, right? But just shift some focus, make some relationships to commercial, because that's what's going to change your life. A lot of the people that do residential wholesale, like, if you're investing in commercial, if you make some of those relations, maybe you do 1 or 2 wholesale deals in commercial, but you start acquiring. That's what changed my life, was making acquisitions there. Stopped buying single family, started buying motels and healthcare facilities, and everything changed for me, so I would highly recommend that.
Yeah. And it almost seems like the best thing to do in terms of from a risk perspective is to have some income coming in on a daily basis. And then you can have these longer commercial plays be like, your daily expenses are taken care of with this, more frequent income. And then if these big deals hit, you can just take all that money and just go use it to make more money, just go take that and reinvest it. Right. Cause you have your daily expenses taken care of.
Like your lottery. It's like a lottery ticket, man. It's like you can't really base it. Like, you can make 300-400 grand, right? But it's like, if it happens, like, these deals are huge. There's Fannie Mae, Freddie Mac. These surveys are hard on multifamily deals. 300-400 units are up. I would say 50 to 100 units. Stay below 100 units if you want a wholesale commercial, multifamily. Everything above that's really hard to value. Insurance costs are going up. It just doesn't underwrite anymore. Interest rates are high. I haven't had much success in very large deals, but maybe one works, but just treat it like a Hail Mary. If it lands, thank God. If not, keep moving on the other ones.
I think that's so good. So good, man. So many actionable steps, tactical things, I think, help people understand the differences between residential and commercial. Kind of what are those major differences? Obviously, commercial, you're dealing with more people. There's different levels to commercial. Timelines are longer. There's more things you have to look at, different valuations, all those things. Definitely a lot to take in. Where can people go to find out more about you, or if say they had a question about commercial, or they have a commercial deal they want to bring to you? Where's the best place to reach you?
Yeah, so Jake, I'm working on my branding. We're launching a new website. We're changing our actual venture capital company, right? So I'm going to get with you here soon. But right now, you could reach me at my Instagram. Just focus there, and then I'll roll something out in the near future. It's just at Tyler Sky Bennett. You have my information, Jake, and you could share it. Feel free to share that. But I'm going to work on branding and social media. Kind of been a recluse in that area. But moving forward, and I've noticed as I'm getting to that bigger level, like I said, institutional level, they require it. Where's the website? Where's your portfolio? What have you done? Show me. Like I need proof, right? And everyone on New York has it. So if you're comparing yourself to the biggest companies, that's where we're going. So yeah, you could reach me at Instagram, but here in the near future, we'll be rolling out our brand.
Love it. Tyler Sky Bennett on Instagram. Probably DM him, and then he's got some websites coming out and things. Yeah, that's huge. All right, last question here. What's the number one piece of advice you'd have for someone who's looking to get started in commercial real estate? The number one action step they can take today?
Relationships. You want to make relationships with people, introductions, and connect to people that are already operating at that level. Brokers. I've worked with brokers, mortgage lenders, people in that space for 20, 30 years. And that's who's going to get you connected to other investors, and the opportunities to actually get your feet wet and in that space successfully. You don't want to go there with no connections. So if you could focus on one thing, is just make the right relationships.
I agree. That goes for a lot of things in life. Relationships. Network
Absolutely.
is your net worth. It's the most trite saying, but it really is the truth. But Tyler, I appreciate you, man. Good to finally see you, and we'll be in touch. So next time, guys, I think next time is Justin Tumanowski. I said that last time, but next time we got Justin Tumanowski coming on talking about creative finance. Have a good week.
Awesome. Appreciate it, Jake.